Thanks, Zach. Well, the clock is ticking to file your taxes, and the experts say you should already be thinking of ways to save money next year. So before we get to next year, we want to talk this year. My friend Gene Marks is here, 1 year at a time here.
I know.
Gene is, of course, is a small business owner and columnist. Thanks for being here.
Great to see you.
Great to see you, too. So let's start tips for this year. I mean, the clock is ticking, as I said. Any tips for those stressed out right now?
We're talking about for 2024 still? Is there any last minute things you can do? Because I love when I get interviewed these things. You're like, what can we do to save? It's like months after the end of the year.
That's why we got to think next
So the biggest advice for you, if you still want to save taxes on 2024, it's all about retirement contributions. So you still have time up until April 15th to make an IRA contribution. And if you do that, you can reduce your income and save taxes that way. If you're a small business owner, even if you extended your tax returns till September, you could still make contributions to your retirement plans and to your employees' retirement plans up until that September 15th date, and get a deduction for it and reduce your income. So for 2024, retirement plans is what you would want to focus on last minute.
Okay, and you wrote an article recently for Entrepreneur where you talked about ways to minimize your taxes in 2025 because we have to start thinking ahead now. And you start the article by saying you're getting ready for a tax Armageddon, which doesn't sound so great. Tell me.
So Eve, I got to come back here and talk to you. It's going to be another month or two because it's all coming up into Congress. All taxes are going to change significantly this year. There was a huge bill that was passed back in 2017 that was championed by the Trump administration then. All of that parts of the bill, which had a lot of tax cuts, are coming due this year. Like they're going to expire. And it's like big deal. Like, you know, your standard deduction, like if you're just an individual taxpayer, you get to deduct $15,000 right off your income as a standard deduction. If nothing happens, that gets cut in half. So that's like a big issue. And then small businesses get a huge 20% tax deduction if they're a pass-through company, like a partnership or an S corporation. That goes away as well. So they're going to be negotiating all of this kind of stuff. It's going to be coming up to a big tax bill. Trump is proposing to eliminate taxes on capital gains, eliminate taxes on overtime, eliminate taxes on tips, which is wild. So there's a lot of things that can really, really change this year. You got to keep your eyes out and work with your accountant.
Okay, a lot of changes, a lot of uncertainty. So now's the time to act and think ahead, you say. Let's outline some of the things that you recommend, starting with investing in capital equipment. Why is that important? So
it is very likely that even with all of these changes, we're going to go back to the old days with being able to deduct capital equipment deductions. So even though those deductions have come down in the past couple of years, I'm betting, and I think it's a very strong bet, the business owners will be able to take big deductions this year for capital equipment. So buy it this year. Make investments in capital equipment this year. You will get big tax benefits for doing that.
Okay. You also say to maximize your retirement contributions, which we kind of talked about already.
And Roth. Did I give you that note?
Like, that's another one. So maximize that, right?
Can I also just a shout out for Roth 401ks and IRAs. If you're like a younger person, you put money away in a Roth account. It's after tax. But it grows tax-free, Eve. So, if you put $5 grand away now, and hopefully it grows over the next 20, 30 years, it grows tax-free, and you can take it out anytime you want. So, if you've got the ability to maximize your Roth savings, talk to an advisor and do that.
Yeah, this is one I'm interested in, employing your kids. Tell me about that.
Your kids are still too young. They're too young, so don't even get any crazy ideas. I'm going to see them running around bringing us coffee.
Oh, mom's making us work.
I was like around middle school age, and here's the big advantage if you have your kids and you employ. By the way, they don't have to be your kids. They can be like anybody's kids, right? You pay them. Remember, I told you about that standard deduction. So if you pay them up to like $15,000, they take the standard deduction again, so they don't pay any taxes. Now they will pay some employment taxes like Social Security, but for the most part, no taxes. So it's a tax. You get a deduction as a business owner, and then the kids, they get sort of tax-free money, put it away into some savings account for college or whatnot, and I just think it's a huge tax benefit to employ your kids.
Okay, great. A lot of talk, of course, right now about the stock market. What do you recommend in that department?
So there's been some losses, I understand. I am still bullish long-term on the stock market. That's another topic for another day. Tax loss harvesting. Here's what you do. If you have a stock and you really like it, but it's down, like Amazon for me, but you can sell it now, take the loss. It can offset any gains or even offset up to $3,000 of your income, that loss. Wait 30 days, buy it back. So it's called a stock wash sale.
Okay.
So it basically means, Eve, that like if you really like the stock and you're like, I really think this is going to go up over time, I can grab a loss for it right now because it went down in value. But then I'm just going to wait a month, buy it back again, and then just reap the benefits long term as it grows.
All right,
so look for those stocks that lost money.
And you have a lot more tips and strategies in your article, which we'll link to our article on WFMZ.com that you wrote for Entrepreneur. I want to take a quick minute to talk tariffs. A lot of folks concerned with the, navigating the tariffs and the uncertainty in Washington. Any advice in terms?
Two quick pieces of advice. This is really for business owners, I just want to say, okay? I'm actually thinking of your husband, but that's a whole other...
We might need to arrange a conference call.
There is something called bonded warehouses and free trade zones, okay? People like your husband that are buying materials from overseas, if they buy those materials and put it into a bonded warehouse, there are plenty in this area, as well as in New Jersey, you pay no tariffs on those goods until you pull them out of the warehouse and use them. So if he or any business owner wants to buy all those materials, store them away, and wait to see how all this tariff stuff plays itself out, they could pay a lot less in tariffs when they pull the money, the inventory out of the warehouse 2 months from now, rather than paying the tariff now. So it's a really good way to defer your tariffs. That's number one. Second, I just got to give a shout out, because I've written about them a few times, the World Trade Center Association, WTCA.org. They will match your husband's business with suppliers in more tariff-friendly countries around the world. They will make introductions. They will accompany him on a trip to those countries if they want to make, introductions. So he or other business owners that are looking for alternate suppliers, if they use the World Trade Center Association, just becoming a member, it's not very expensive. They can find much lower cost products and avoid some of those tariffs. That's just two thoughts.
Thank you so much. Great advice. You always cover a lot of territory. GeneMarks.com for more information. Thank you so much for being here. We'll be right back.